This is Mark Aspie once again, markettamer.com, optionsrevolution.com, and must remind everyone this is for educational purposes only, never to be construed as a recommendation to buy or sell anything. Please do your own due diligence. Looking at the comp Q, similar in many respects in the other two indexes, we have a head and shoulders, left shoulder, head, right shoulder. Very consistent trough on both of them, actually very horizontal here coming across here. We put a low in here, a low in here, so these two troughs about 2160. And you can see today we put in a hammer type of a pattern and it did not penetrate below that neckline. Interesting to see here too that we really have a little box going on right here. Okay, we got the gap down here about a week and a half ago, and then we've been in this little box. So we're really in a channel there, and we're looking for a breakout to the upside or the downside. We're touching the lower end of the Bollinger Bands right now. We have this internal trend line, and we have some touches all the way down through here, and we could very well continue to follow this trend line as it moves down a bit further. We got this double bottom right here, which we need to recognize, which is about 2135, and could be significant support here. It actually is very close to lining up right here. This is about, I guess, really more like 2140, and this is about 2155, so it's pretty close right here. We also have this gap here and a gap here. We need to recognize gaps, so if it comes back up this way, we need to understand that this could provide some resistance. This could also provide some resistance right here on the way back up. If we do bounce and continue up, so that would be the first thing to contend with, is this gap and this gap right here. Then we have this flat top right here about 2300, and we have the swing high over here at about 2340. We also have this swing low here just above 2300. Actually, if we extended this flat top resistance across here, it would be essentially the same, around 2300. We have some gapping going on back here too. Can't forget about that, which is around 2250 to 2270, and that could act as resistance on the way back up as well. And we have this swing high here at about 24 and change, and then 2535, the top that was put in April. We are in the oversold area. We were actually, poked its head up above the oversold area, and that just crossed over again. It looks like it wants to come back down in the oversold area. And the MACD is showing some momentum with the histogram pulling away from the zero line and having the crossover. So I am a bit more bearish than I am bullish. It's almost a coin flip. But again, here it's showing this trading range, so I think we should treat this like it's going to stay in this range and just go ahead and follow the market. And if it breaks down, we follow it. If it breaks up, we follow it as well. But I think it would be a prudent thing to remain hedged, certainly. This is a very skittish market. It just kind of doesn't know what it wants to do. These huge trading days here, very different than prior to the April highs. So I would suggest that, remain prudent, remain hedged, diversified, position sizing is important, and just be nimble and pay attention to what's going on in the market. You can get bit real quick here if you're not paying attention. So a summary here again, just a bit more bearish than I am bullish, but it could go either way. All right, have a good week of trading. Look forward to talking to you next week. This is Mark Aspie.